What if I told you the market is not moved by numbers, not by charts, not even by news, but by invisible emotions, fear, greed, and hope that live inside every trader's mind? Welcome to the hidden side of trading, where the battle is not on the screen, but in your psychology. Imagine this. You enter a trade with perfect analysis. The charts align, the indicators whisper opportunity, and your conviction feels unshakable. But then, suddenly, the price dips. Your heartbeat quickens, your palms sweat, and the voice inside your mind screams, "Get out before you lose everything." This is fear. Moments later, you finally build the courage to hold on. The price recovers, it climbs higher, and adrenaline floods your body. Suddenly, fear transforms into greed. The same voice whispers, "Hold a little longer. Don't settle yet. There's more to gain." You listen, but before you know it, the market reverses and your profit dissolves into regret. Fear and greed, the twin shadows haunting every trader. They are not abstract concepts. They are deeply wired into our human nature, forged by evolution to protect us in survival, yet tragically misplaced in the world of trading. Number 1. The psychology of fear. Fear is a survival mechanism. It once kept us alive against predators, but in markets, it becomes an enemy. A trader's fear is not of lions or storms. It is of loss. Fear magnifies uncertainty, distorts rational thinking, and creates panic selling. The market feeds on this fear. When prices drop suddenly, fear spreads like wildfire. Traders rush to exit positions, not because the fundamentals change, but because they are terrified of being the last one left holding the bag. The irony? Fear makes you act at the worst possible moment. You sell when prices are already low, locking in losses that could have been avoided with patience. Number 2, the psychology of greed. On the other side, greed is no less dangerous. Where fear tells you to run too early, greed chains you to the trade for too long. Greed is the illusion of more. It convinces you that the rally will never end, that the chart will keep climbing, that you are on the brink of unimaginable profit. But greed blinds you to signals of reversal. By the time you realize the truth, the market has already punished your overconfidence. Greed also drives risky behaviors, oversized positions, chasing after trends, and ignoring stop losses. It whispers promises of wealth, but leaves you vulnerable to destruction. Number 3, the fear-greed cycle. Most traders oscillate between these two shadows, fear and greed. You fear when a market falls, and you become greedy when it rises. This cycle keeps repeating, pulling you deeper into emotional trading. In truth, the market is neutral. It has no emotions, no bias, no intention of harming you. It is your own fear and greed that transform it into a battlefield. Number 4, breaking free from the shadows. So, how do you overcome these primal forces? Awareness. The first step is recognizing that fear and greed are not signs of weakness. They are natural human responses. But awareness allows you to separate yourself from the emotion. When fear arises, pause. When greed tempts you, reflect. Discipline through rules. The most successful traders do not rely on willpower. They create systems, risk management, stop losses, entry and exit rules. Discipline transforms chaos into clarity. If your decisions are guided by rules, emotions lose their grip. Reframing losses. Fear of losing comes from associating loss with failure. But in trading, losses are inevitable. A loss is not a failure. It is tuition paid to the market. Once you accept this truth, fear no longer paralyzes you. Greed as hunger. Instead of suppressing greed, channel it. Let your desire for growth push you to learn, refine your strategy, and improve discipline. Transform raw greed into a hunger for mastery. Number 5, the master perspective. Legendary traders know that fear and greed never fully disappear. The shadows remain. The difference is they learn to dance with them. They use fear as a signal of caution, not panic. They use greed as motivation, not recklessness. In this way, trading becomes a mirror. Each trade reflects your inner state. Each chart is not only a pattern of price, it is a canvas of human psychology. If you conquer fear and greed within yourself, you will see the market with new clarity. Because in the end, The real battle is not between bulls and bears. It is between your discipline and your emotions. Picture this. A sudden crash begins. Candles bleed red, social media explodes, and news anchors declare disaster. Traders rush to their screens, panic burning through their veins. One person sells. Then another. Soon thousands follow. It feels impossible to resist, as if an invisible tide pulls you into the same direction. This is herd mentality, the silent trap of the market. Herd mentality is not unique to trading. It is hardwired into human nature. From ancient tribes gathering for survival to crowds fleeing danger, following the group has been a mechanism of safety. Alone, we felt weak. Together, we felt secure. But in the market, this instinct betrays us. Number 6, the illusion of safety in numbers. When we see thousands of traders doing the same thing, buying or selling, it feels right to join them. They can't all be wrong, we tell ourselves. Yet in trading, the majority is often wrong. Why? Because the market thrives on overreaction. When the herd panics, they sell at the bottom. When the herd celebrates, they buy at the top. The illusion of safety in numbers becomes a trap of mass psychology. Number 7, the crowd's blind spot. Crowds do not think, they react. Fear spreads faster than logic. Greed spreads faster than reason. When you follow the herd, you surrender your independent analysis. You stop asking what is really happening and start asking, what is everyone else doing? This blind spot leads to catastrophic mistakes. Consider bubbles. Tulip mania, the dot-com boom, the housing crisis. Each began with enthusiasm, then grew into frenzy. People bought not because fundamentals justified it, but because everyone else was buying. By the time the bubble popped, the crowd realized too late. They had been feeding the very beast that consumed them. Number 8, why the herd always lags. The herd is always late. By the time news reaches the masses, the market has already moved. By the time everyone is buying, smart money is already selling. By the time everyone is panicking, professionals are quietly accumulating. The crowd chases but never leads. This is why trading against the herd often feels terrifying, but also why it holds the greatest reward. To act with courage when others are afraid, and to stay patient when others are greedy, is a true mark of mastery. Number 9, breaking free from the herd. How do you avoid this silent trap? Independent thinking. Build the habit of questioning. Ask not, what is everyone doing? But, why are they doing it? What do they not see? Independent analysis protects you from blindly joining mass hysteria. Contrarian mindset. Great traders often go against the herd. When panic dominates, they look for value. When euphoria reigns, they prepare for reversal. This does not mean you blindly oppose the crowd, but that you see beyond surface-level noise. Silence the noise. Social media, forums, and news amplify her behavior. To master psychology, limit how much external noise influences your trades. The quieter your mind, the less you are swayed by the collective storm. Confidence in your system. If you have no plan, you'll always follow the crowd. A solid strategy gives you the confidence to stand alone when others rush blindly. Number 10, the lone wolf's advantage. There is power in being a lone wolf. Not arrogant defiance, but calm clarity. The lone wolf observes the herd with detachment. He sees a wave of panic and greed, but he does not drown in it. He uses it, because while the herd reacts emotionally, he acts strategically. The market rewards not the follower, but the observer. The one who understands that mass psychology is the greatest force in trading and chooses not to be controlled by it. In the end, herd mentality is a silent trap that swallows a majority. But those who escape its grip find freedom, not only in trading, but in life. What separates a losing trader from a winning one? It is not intelligence. It is not access to better tools, faster data, or secret strategies. The true edge, the difference that decides survival, is self-discipline. Trading is not a game of prediction. It is a game of consistency. And consistency comes only from discipline. Number 11, why strategies alone fail. Think of it this way. Countless strategies exist. Books, courses, algorithms, all promising success. Yet, If strategies alone were enough, every trader would win. The truth is, even the best system fails in the hands of an undisciplined mind. Without discipline, rules are ignored, risk is neglected, and emotions take control. Number 12, discipline in action. Discipline means entering a trade only when conditions align, even if temptation whispers otherwise. It means cutting losses quickly instead of hoping for miracles. It means taking profit as planned, not chasing just a little more. Discipline is boring. It is repetitive. It lacks the thrill of reckless gambling. But it is the boring discipline that builds long-term success. Number 13, the war within. The greatest enemy of discipline is not the market. It is yourself. Your mind craves shortcuts. Your emotions beg for exceptions. One moment of weakness, moving a stop loss, doubling down in desperation, can undo months of progress. Every day, the disciplined trader wages war against these impulses. Some days he wins. Other days he stumbles. But what matters is persistence. To return to discipline again and again until it becomes second nature. Number 14, building the habit of discipline. How can you strengthen discipline? Clear rules. Write down your trading plan. Entries, exits, risk limits. If rules live only in your head, emotions will erase them. Risk management. Never risk more than you can afford to lose. Discipline in position. Sizing prevents emotional chaos when trades go wrong. Routine and ritual. Approach trading like a professional. Have rituals. Pre-market review, journaling, post-trade reflection. Habits create structure, and structure breeds discipline. Accountability. Share your plan with someone or review your trades in a journal. Accountability turns discipline from an abstract idea into a concrete practice. Number 15, discipline beyond trading. Here's the hidden truth. Discipline in trading reflects discipline in life. If your personal life is chaotic, sleep irregular, emotions uncontrolled, habits scattered, your trading will mirror it. But if you cultivate discipline outside the market, it strengthens you inside it. Trading then becomes a spiritual practice. Every trade is a test of patience, restraint, and focus. Success is not about making money fast. It is about shaping the kind of mind that can endure pressure without breaking. Number 16, the edge no one can take away. Markets evolve. Strategies decay. Technology shifts. But discipline never loses value. It is the one edge no one can copy or steal. While others chase secrets, the disciplined trader quietly compounds wealth through consistency. In the end, trading mastery is not about controlling the market. It is about controlling yourself. Self-discipline transforms chaos into order, fear into focus, greed into patience. It is a hidden weapon that separates amateurs from professionals. In the end, trading is not about beating the market. It's about conquering yourself. If you want to uncover psychology that truly moves markets, stay with me until the very last whisper of this speech, because what you'll discover may change the way you trade forever.